just seems extremely cheap to me. Just focusing on Meta for a moment, the company is growing at roughly a 20%, 21% revenue growth rate for the trailing 12 months, and it has accelerated, meaning the latest quarter is actually greater than 21%. So it's accelerating its growth, and it's still all of its revenue still comes from the main three products: Facebook, Instagram, and WhatsApp. And Meta's Meta's becoming more profitable and growing revenues faster than ever, or not ever, but faster than all of the other sort of Mag 7 large mega cap tech companies. And it has a PE ratio of just 21. So it has this pretty amazing sort of financials going for it, in my opinion. Versus Google, which Google, Microsoft, and Apple, whose PEs are in the 30s, right? So that's part of the reason that I love Meta. And the price has kind of like stagnated in the mid 600s for a little while. And I think that this is sort of ripe for a correction. And that those type of corrections usually happen after a surprise earnings beat or um,
You're saying
just
a
as
correction upwards.
correct, meaning it should not be trading below the price earnings ratio of the other Mag 7, right? Like
Mhm.
if Apple, Microsoft, Google, Amazon are all trading at a PE of 30s and they're all growing slower than Meta, then what's the justification for Meta's PE? It just doesn't make sense. So one way or the other, either the other companies have to come down in price or Meta has to go up in price. But one of those two corrections is going to happen, and it's just a matter of when will it happen, unless all of a sudden they start to struggle for some reason, which does not seem to be the case. They don't even have any revenue yet from their AI products, so all of the AI investments that they're currently making is all upside potential for them. So
Well,
I
don't they
love Meta
have,
for all of those reasons.
indirect revenue from their AI investments because they're optimizing their ads already with the
Yeah,
AI infrastructure they built?
yeah. I mean, that's what they're saying is that AI is actually helping them sell more ads and better ads for their customers. So AI is already helping them in some ways, but they don't have revenue or significant revenue from AI products. In much the same way that they don't have any revenue from their Threads product, which is a competitor to X. But shockingly, Threads is already having catching up in terms of user base to X, which is kind of mind blowing. Now, so they haven't even optimized for revenue on that product either. So when you combine all of the future potential of their AI investments in the form of actual products, um, with their existing three sort of like major products that are generating all the investments and still growing at a super fast pace of over 20% annualized, um, it just it just looks like a very good place to put my money, right? That's
And
the reason I'm excited about it.
what are your thoughts on them shutting down some of their VR studios?
Well, uh, so I have two thoughts on that. Part of it makes me sad because today we saw the announcement that it looks like they shut down Supersonic, which is one of my favorite
Supernatural.
Supernatural rather, which is one of my favorite Quest VR exercise apps.
It's the best
I
app on Quest by
Yeah,
far.
I use that app 4 times a week, and I get a fantastic workout in it. It's awesome. So I was very sad about that. But they're looking at the numbers and revenue numbers, and making decisions based off of that and trimming. It appears like roughly 10% of the staff on that's working on these AR VR devices and potential software. So that's just going to make them more profitable, right? So they're shifting around their focus to be more on AI side and increasing their profitability at the same time. That's not a bad financial decision, but I'm sad about it as a user. I'm sad about it that they're kind of giving up a little bit on those areas,
Does it
but that might
does
be
it
a
give you
fantastic financial. Uh,
does it give you any pause that they recently acquired Supernatural? Like, I think it was maybe 2 years ago at this point, and that they're shutting it down so quickly?
well, you got to remember an acquisition like Supernatural for Meta. which was probably in the tens of millions of dollars. Maybe it reached 100 million. I doubt that it even reached 100 million. But even if it reached, let's say, 100 million for sake of argument, uh, is just a drop in the bucket. Like it has no actual bearing on financials. Um, and they started this acquisition, what, 4 or 5 years ago, maybe longer, before AI became a major priority. So, once something else sort of takes over and it becomes a major priority, then it does make sense to sort of like sit back and reevaluate all of the initiatives that you have going on and say, well, if we have talented people focused on this little area that's generating tens of millions of dollars of revenue, do we want that? Or is tens of millions of dollars of revenue for a $200 billion corporation just such a like drop in the bucket that it doesn't make sense to have any talent focused on it? So they're shifting things around, I suspect, in order to create multi-billion-dollar opportunities come to life, not to expand on $10 million opportunities.